Rich and Owen, for those who haven't come across you online, introduce yourself and tell our listeners what we're talking about today.
My name is Rich Danhof. I am a CPA. I'm also a owner of pharmacies. I've been in pharmacy for about 15 years, probably in some capacity. So spent another 15 years before that in public accounting. A lot of time spent now figuring out the accounting and the financial aspects of independent pharmacy.
Our company, Independent RX Consulting, kind of started out helping people start and buy pharmacies. And, when you've done enough of those, people wanted us to keep working with them. And that's how we kind of ended up in the accounting world.
People start with an accountant or start with a system, and then they find that kind of it worked or they want to keep going. That seems almost especially true in a given industry like pharmacy.
Accounting, like any other industry, I mean, there's good and bad. There's innovative. There are people that are, stuck in their ways. There's a lot of different approaches to things. Nothing's black and white. Even with the tax code, nothing's black and white. There's a lot of decisions that need to be made along the way. And so we see, when we owned 15, 16 pharmacies and we were buying and selling pharmacies, you get financials from different accountants and they would tell you completely different things. And everybody kind of had their own little way of doing things. Some of them understood the intricacies of pharmacy and whether it's billing and rebates and DAR fees and all the different things that come along with pharmacy. Some of them understood it and some of them didn't. Probably 90% of them didn't. So you just get this view of, from different accountants that were just very diverse. And so, we spent with our own financials trying to understand our own business. We spent a lot of time delving into, what is the best view? How do we get the numbers that we need to actually run the business? When you look at the numbers of pharmacy, I mean, you're getting pharmacy system data, you're getting financial data, you're getting payroll data, you've got these sources of information. And, the financial aspects of it are really important. And historically, that wasn't always true. I mean, people would run their pharmacies, they'd fill their scripts, they'd take care of their patients. And at the end of the month, their bank account was up, right? And that was their best judgment on how their pharmacies were performing, was how their bank was moving, because they would get their financials might not show up for 4 months. They might not be detailed enough. They might not be correct. And so they weren't very reliant upon, and pharmacists in general weren't typically, didn't really have a whole lot of training or care sometimes for the financial side and the accounting side of the business.
That's kind of a crazy answer that I'm hearing from you, Rich, because when I think of a profession, like if someone said to me, what's like a typical profession that's kind of black and white, kind of boring, there's not a lot of creativity in it? The first thing I think I would say, well, accounting. It's black and white, it's numbers, it's to the penny. It's a profession that there's no creativity to it. And it's like your definition, and it's true, I've just never heard an accountant say it, where it's like, no, you can get answers across the board. There's some people that are going to have this style, some are going to have this style, some are going to have a stomach for something, some are not going to. So that's a pretty wild definition I'm hearing from you that I just never thought about before from accountants.
I even threw the tax side in the IRS, because what could be, you would think would be even more black and white than general accounting principles would be, how the IRS treats things. And yet we make decisions every day that have different levels of risk associated with them. Do we think this is a black and white issue? Is this a gray issue? If we go this side, how do we treat these things? And so some can be very advantageous to treat one way versus another. And you've got to take a position on these things and determine how you want to approach them. So it is quite a bit of, there is a level of creativity that goes with, and decision making to make sure you're making informed decisions and understand the risks.
Is there a word for that in accounting? Like the stuff that we're talking about, do you have to have a full couple sentences to explain it to someone like me? Or is there a word, is it called risk taking, or is there like a more professional word in accounting?
I don't know that there's a word necessarily to describe it. And we're not always talking about risk. What we're really trying to do is especially in the financial side, step away from the tax side where there is risk associated. If you take an aggressive stand on something and it gets overturned by the IRS in an unlikely audit, then there's risk associated with that. But when we're looking at the financials of the pharmacy, we're trying to get the best information so that we can look at our store and we can understand if we're making money or not. And, as reimbursements are going down, as costs are holding steady, so margins are getting compressed, I need this bit of information. I need to understand what's happening. And so some accountants are going to use what's called accrual basis of accounting. And that's a GAAP. It's based on GAAP accounting, generally accepted accounting principles. And they're going to adhere strictly to GAAP-based accounting. But others are going to be using cash basis of accounting. And there is a huge difference between using cash basis of accounting and a view that the cash basis of accounting is going to give you versus what an accrual basis is going to give you. And most pharmacists don't necessarily understand that. And they shouldn't, right? That's not what they went to school for. That's not their background. That's not what they're trying to. So if their accountant says, hey, we use accrual based accounting and this is what we're going to do, those are the financials you get. And so you have to understand what that's telling you. And if you switch accountants and they're saying, well, we use the cash basis accounting and this is, it's going to give you a very different view of how your pharmacy's performing financially. They're just different concepts. And then everything's a hybrid or modified, like I'm using modified cash basis accounting. So there's just lots of different views. And again, our goal is to make it as clear as possible to people. And because it comes from ourselves, right? When we're looking at our stores, we need the clearest possible view to understand how our stores are performing and make sure that they're performing the way that we need them to perform so that we can be there down the road.
We tried predicting in the past. It hasn't seemed to work so well. Let's just see how it all comes together with cash. You'd think that accrual would be more reality, but actually cash seems to be more reality. Predicting versus not predicting. But there's something more than that I'm hearing from you.
Well, you talk to any accountant and they're always going to gravitate towards accrual because that's what they've been trained in. Any publicly traded company is going to be accrual basis of accounting, and accrual tends to smooth out a lot of the volatility in the numbers because cash is simple. Cash is when the cash moves in or out of your bank account is when you're recording the transactions. Whereas with accrual is trying to do something called matching. It's trying to match up at the point of dispense. So everything happens in accrual at the point of dispensing. When you dispense those drugs across the counter, you are recognizing the revenue and the cost associated with those drugs, right? So that's all at dispensing. It's matching up the 30 pills, the cost of those 30 pills as you get paid for them. Whereas cash, you might have bought those 30 pills 6 months ago. So under cash basis of accounting, I recognize the cost of those 30 pills when I paid for it 6 months ago, not now when I'm dispensing them. And I might not get paid for a month or 3 weeks or longer if my payer's really slow. So I don't recognize revenue in cash basis accounting until that cash comes in from my third party payer. So you're in cash basis accounting, you're really separating. You're not doing the matching at the point of dispense. It is when I buy it and pay for it to my wholesaler, I'm taking the deduction or the expense into my P&L. And when I get paid, which is on the other side of dispensing, I'm going to recognize it. So I'm not going to recognize it until I actually get cash from the payer. So there are two very different approaches to the business, and each one has its merit. But at the end of the day, if I'm running a small business and, what's most important to me? Well, cash is most important to me. If in today's brand environment, when you've got $300 or $400 brands constantly going out the door, you're paying for those in advance of getting paid for them. There's your cash flow problem, right? Because you're spending all this cash and it's going out the door. It's not reflected in your P&L until you dispense it. And by the way, you're not getting paid for it for 3 weeks after you dispense it. That's when you're going to recognize the revenue. So the cash basis of accounting, we've kind of, and that really threw me for a loop as an accountant that I was going to go back to cash, right? Because you spend so much time and energy focused on getting the accruals right. But what we find is that, small business owners, cash is king. And so you gotta track the cash.
Would it be fair to say that cash accounting, I get to delay my profit? We know in pharmacy, the profit may never even show up, but would that be like a one sentence benefit that we get to delay that profit?
We do. We get to do two things. We accelerate a deduction and we delay a recognition of a revenue.
Because the cost is early, right? The cost is earlier than accrual?
Yeah. When you pay your wholesaler, it depends on your terms with your wholesaler, but typically it's, 2 payments a month or something. So you're about 15 to 17 days out with your wholesaler. So when you pay your wholesaler, that's when you're recognizing the cost into your P&L. You're not putting it into inventory, holding it into inventory for 3 months and then dispensing it and then recognizing the cost in your P&L. As you buy it, you're recognizing the cost as you pay for it. So as the cash goes out of your bank account and
that becomes an expense right then.
Yeah, you're accelerating a deduction or an expense and you're delaying the recognition of a revenue.
For some reason I was thinking that you were able to do the cash for a year and then you had to go to accrual or something like that. I mean, when does this catch up? I got to believe that in the end, when all is said and done and a business finally closes, that this all catches up with each other. If not, everybody would be doing one or the other. But there's no catch-up time? It's not till the end where it all evens out to zero?
No, you're absolutely right. I mean, this is not a permanent difference. In accounting and taxes, there's permanent differences and there's timing difference. This is purely a timing difference. You're accelerating a deduction. You're delaying the recognition of the revenue. That's an advantage to you. I mean, you're going to want to deduct things as quickly as possible and delay the recognition of revenue. When you go to sell your store, if that's 15 years down the road, you're not going to have inventory on the books on a cash basis because you've already deducted it. So you have no basis in the inventory that you sold. So you're going to pay a big tax bill on the inventory at the end of the road. But at that point, you're getting paid for your inventory. You have the cash to pay it, right? This is all about cash flows. It's about the timing of the cash flows. So if you had to make a big payment, I'd rather make the big payment at the end of the road when I sell my store, since I don't now have any basis in my inventory. I'd rather make the payment when I'm getting paid by my buyer and I have cash to make the tax bill rather than pay that tax today.
I'm running away to Fiji. They're not going to get me.
Well, that would be a permanent difference, but you probably can't come back, right? So,
Rich, but wait a minute. Is there any business where this would not be good for? And if that's the case, why doesn't everybody do this? And why isn't cash more popular than accrual now?
You do see a lot of cash now. And in 2018, with the change in the tax legislation, that's when it opened it up even further. So the rules are generally if you don't make more than $25 million in revenue.
Oh, I see. Gotcha.
Right. So if you're over $25 million in revenue, you cannot use cash for tax purposes. So, and they've also opened it up where if your inventory items are less than 2,500 a unit, so if you have large, expensive pieces of equipment and inventory, then you're also excluded from using cash. And then anybody that's using GAAP basis of accounting, and maybe they've got bank loans that have covenants that require GAAP basis of accounting. GAAP basis of accounting could not be using cash. So there is it's meant for a select group of small businesses to use cash basis of accounting. And again, not just for the tax deduction, but for the insight into your business and that cash tends to give us. It gives us a very different view than what accrual does. Accrual can say, you can look at your accrual financial statements and they say you're making money every month.
Yeah.
But you look at your cash and your cash is going down.
Right.
But that's because of the difference in timing on how things are handled under accrual basis of accounting. And that's where it's a much simpler view of the world and of your business when you're looking at cash basis financial statements. And so that's for our clients, we use cash basis financial statements. And it's not that the accrual information isn't really important. That matching concept is really important because if you're dispensing 30 pills tomorrow to your patient and you want to know if you made money on those 30 pills, right? It doesn't matter that I bought it in a 1,000 count bottle 6 months ago. But now I've got to dispense it, and I want to know on these 30 pills that I dispense, am I going to make money? And especially if it's a brand, right? And you're paying $300 for that bottle of drugs. You want to know, am I making $10 on and so I'm getting paid $310 and I'm dispensing $300. I've made $10 on that particular script. So the accrual and the matching principle is really important, and we got to make sure it's right. But guess what? Your pharmacy system's telling you that.
It's not giving you the day-to-day reality, though.
Right. And so we spent probably 10 years and we had a larger business than 25 million. We spent, 10 years running our business, and our books were accrual. And we spent so much time fighting between what our pharmacy system said our inventories were and what our books say. We spent more time doing that, trying to get the two to match, and they never did. And so then you're really in no man's land, and you've got these guesstimate numbers that are rolling in for your inventory and for your receivables, and your what's flowing through your P&L isn't necessarily reality. So we spent a lot of time banging our heads and time and energy trying to get our financial statements and our pharmacy system to match up.
Pharmacy is unique because you have this pharmacy system, a separate AR software, typically like a NetRx or what have you, that's telling you AR, it's telling you inventory, it's telling you the accrual margin you made on something.
Yeah.
So to Rich's point, we stopped fighting it. Okay, show me my cash. Okay, show me my accrual. Now I know what's going on.
Right.
I can see both views. And it allows you to identify, do I have too much inventory, or am I just not buying at a proper cost?
Right.
Or am I not getting reimbursed?
In their great benevolence and wisdom, why did the government then, it sounds like when they were going under 25 million and under, or whatever that was, and under $2,500 per item or something like that, why did they make that cash? Is that a lot easier for, mom and pop things? They're not keeping track of, the appreciation of a candy bar or something like that. Why did they do that smaller for cash? Just because there's so many little transactions across the board, no matter what industry you are in, at levels below that?
It is simpler, and being simpler, it's more cost effective. I think that they gave access to cash accounting to more people that can don't have to spend as much time and energy creating their financial statements and getting their information together more timely, and utilizing those financial statements for both operational and tax purposes. So it just opened it up to more small businesses. And again, people aren't relying on their financial statements in the same way that a large corporation where they've got stockholders and they've got investors and they need a consistency and they need a standard way of doing things. And so again, the end users, even the SBA doesn't have debt covenants. So when you have an SBA loan, you don't have debt covenants with the SBA that requires you to submit financials every quarter or every year even. So there's not a whole lot of people relying on these financial statements other than you.
They're just a pain in the ass, and no one's really relying on them anymore.
Well, and that's part of the problem, right, is they've been such a pain in the ass that everybody hasn't relied on them, and they've forgotten how to use them and read them. And now that, again, margins are getting compressed, reimbursements are down significantly over even the last few years. The margins are so thin. If you don't understand your business and you don't know where it's going and have a view of it from a financial aspect, you're taking significant risks with your most important asset. So it's becoming more and more important every day to understand your financials.
And to do that, the cash makes it easier.
We found that the cash basis has been simpler. And again, the fact that we've got a pharmacy system that's kicking out basically accrual, it's doing the matching for us. It's telling me this month I dispensed 5,000 scripts and this is the cost associated with it and this is the revenue associated with it. So we've kind of got the accrual side and the matching side coming out the pharmacy system. Now we've got financials that are cash basis and they're telling us a little different story. So we've got the pieces, we've got more pieces of information to make decisions on.
I think the other thing, Mike, is you're absolutely right, but also making those financials so that they're tailored towards the pharmacy. because I see so many financials, you get, I mean, there's lots of good local accountants, but they have to make their businesses scalable. So the pizza place has the same line items as the pharmacy.
Yes, gotcha.
Right. And so, you have sales, you have cost of goods, you have expenses. None of it's broken down. It doesn't show you, okay, OTC, or how much cash did I did, how much party payer did I do, from my cost of goods, how much did I buy from secondaries? How much did I buy from my primary? Like, it doesn't tell you anything. And so then you, as a small business owner, stop reading them.
Right.
So that's where getting someone specialized in it helps you. You have something that is towards your business that you can understand and then make decisions off of.
I suck at a lot of stuff in life, but one thing I really suck at is knowing what my inventory was over the years. And my accountant would always say, well, this matters. And it's like, all right, I know it matters, but even if I have it down to the day, but that's not even down to the hour. I mean, that can shift by $10,000 or $15,000 depending on, well, do I count this as in the box in the back room or not, right? And now multiply that by a week of, whatever, $100,000 or something. The question I have, am I a little bit off the hook now with the cash accounting? Did I hear that, Rich? Or am I still on the hook to pretend like I have a good inventory level when my accountants ask for it?
Both. I mean, you definitely, we don't want to lose sight of what our inventory is, right? And that's probably, like you say, that's probably the hardest thing in pharmacy is to get your inventory right.
Okay, I understand the benefits not having money tied up in it, but let's say that I have a nice tight inventory, and I'm doing great there. Is that value important for accounting reasons?
Not necessarily for accounting reasons, but for operation reasons, right? So the first thing we look at when we see cash going down on a cash basis financial statements, when we see the cash balances declining, the first thing we're looking at is the inventory increasing, right? Because that's usually the exchange that's happening is you're putting your cash into inventory, and your inventory, and we're hoping, because that's an easier one to fix than most other ones, right? We're hoping that you've got a ton of inventory sitting on your shelf, and we can do some returns, and we can clean up and quit buying so much. That's the first place we look. So if we don't have a tight inventory, like you said, we're not sure, right? So we need to see, what your inventory levels are doing, and you want your pharmacist at the verification station to be able to look and see, am I making money on the script I'm dispensing, or should I, try to get a switch to a generic or something else to not lose, $100 on the script I'm dispensing. So you need a good inventory to understand that. But at the same time, when we know that inventories are not right and that people don't keep good inventories, the cash-based financial statements at least tell us the truth, right? The cash doesn't lie. What came in and out of your bank account is the truth.
That's what I'm getting at. There's still a lot of good reasons. And I understand the reasons for having a tight inventory and, investing and not having product collecting figurative dust on the shelf and being in date and all that kind of stuff. I get that. But as far as tax-wise, do you need to know the value of my inventory to complete your cash accounting?
No. If you're on the cash basis of accounting for tax purposes, when you buy it, you will deduct it. So there is no inventory. So at year end, you should know what your inventory is, but there's no place on the tax return where we're going to say, here's what your inventory is.
The thing we see, Mike, is, and I'm sure you've seen this, is, you get at the end of the month and your accountant asks what's your inventory, because to finish up that month's financial, and then you're like, oh, I gotta go try to true this up. I didn't keep it up in my pharmacy system. And so then that's what starts causing the delays in receiving your financials.
Exactly, Owen. That's what I'm getting at.
And so then you just get used to not using them, and it's just this perpetual, so cash allows you just that at least you have something that said, I sold this, I bought this, and you at least have something. Now, that being said, I mean, everyone listening, please keep your inventory as up to date as you can. But it won't delay your financial.
I don't want to let anybody off the hook with this. There's a lot of great reasons, but you're exactly right with the accountant. It was like, we know Mike's not going to get his inventory every month exactly. It's going to delay something. So let's do it at the end of the year. Well, that's fine when years ago when, and our dads were, what was your dad saying? Everybody would complain about the profits in pharmacy, and then they'd all hop in their BMWs or something like that. When there's money there, that's fine. But when you need stuff month to month, that year-end inventory for accrual counting is not the way to go.
Right. Part of the value of your financial information is the timeliness of the financial information. And so we're able to get financials out much quicker. They give us a good view of how our store is performing. We're also looking at our pharmacy system. We're looking at our reconciliation service for our receivables. Our two biggest assets are still our receivables and our inventory. So we're going to still manage those and make sure we're tracking and try to get better and better and, use a pharmacy system that actually, gives you half a chance at getting it somewhat correct. But the financials are going to be there. They're going to be more timely, and they're going to tell us a big piece of the equation. And used in conjunction with your operational data and your payroll data, you now have a pretty clear picture of how your store is performing.
I mean, it sounds like with cash accounting, it sounds like if your accountant has the system set up right in order to turn this over, really there's no delay in your month-end report. Just getting the numbers and manpower of doing this and that, but you're not waiting for anything anymore. You're not waiting for, it used to be too that our accountant would ask us like, what bills do you have coming due on, before the 15th of the month and this kind of stuff. And that always seemed to delay stuff, but that's not really there either, it seems, right?
No, those are accruals, and that's the accounts payable and the accounts payable accruals. Again, those don't get recorded until they're actually paid. So we're not worried about bills at month end that are going to get paid in 3 weeks, because in 3 weeks when they're paid, we'll record them. So there is definitely a shift there. We do look at debt and we keep that on the books. We feel like and again, this is back to nobody's usually pure cash or pure accrual. There's some hybrid. What we like to keep the debt on the books so we know exactly how much debt you owe the SBA or your bank or your wholesaler. So those large debt pieces. So we'll have to confirm what your debt balance is at the end of the month, what payments that you've made and what the interest versus principal portion of those payments are and stuff. So that's really the only thing that we kind of gather at month end. There may be, we have to look at transactions and make sure we understand all the cash transactions that went through credit cards and bank accounts and such. But our commitment is generally to get financials published within a week to 3.5 weeks. We definitely want them published before the next month comes around and closes. So if we can, on average, get our financial statements pushed out within a couple weeks, that's pretty timely and valuable enough that we have time to react and to make more decisions, right? So you have the data in hand to make decisions if you need to.
That means a lot, because sometimes people are hinging on a bank loan or deciding they might be selling their business. Maybe someone's ready to flip the lever of saying, we'll buy you, but we want to see the last 3 months. Well, when the third month doesn't come in, well, by that time you might have been great and come down already. And then they're worried about that or something. So that turnaround is big, especially in this age of people wanting instant answers, and having accounting, which is behind, just doesn't make sense anymore, especially when the availability is there for the cash accounting.
Yeah, and even if you did accrual, you could, you still got to get those financial statements published. You can't wait 3 to 6 months to get data on how your store is performing. So whichever method you're choosing or your accountant's choosing, there's got to be an expectation that, within 30 days or so that you're seeing, the financial statements. And it's also based on, we've talked about kind of timeliness and the matching principle, but there's also materiality, right? You could take a whole lot of time to get down to the nickel and dime, and we've got to keep materiality in perspective. And so we don't have to be down to the nickel or dime. We got to have them materially correct, and we've got to publish them quickly so that they're timely, and that's our goal.
Owen, do you and Rich, do you tell each other and do you tell the accountants, like, well, this is what is material for us? Is that based on your company, or is there any kind of standard? Like for someone, a dime might be better than a penny, and for others, maybe $100 is close enough.
Yeah, it's just going to vary on the store, because you may be looking at a store that's filling, 55 or 60 scripts a day, and their level of materiality is very different from a compounding store that's doing, 3, 4, 5 million, right? Or a retail store. So it depends on the store.
And it depends who's on the other end of the email, because if you send Bob at Bob's Pharmacy, 100 emails and he never gets back to you and you just want to make sure he's still alive, well,
right.
Maybe $1,000 is close enough for Bob.
Yeah, absolutely.
I would say the other thing, Mike, is that, as a business owner, is your time really spent well looking at $100 on your vials, right? I mean, what we try to, if someone comes back to us and says, hey, this was categorized in other versus pharmacy supplies, it's like, well, we were waiting on you. We'd rather get them out and allow you to concentrate on the 80% of your business, that matters. Okay. What are you doing to increase revenue? Or, cost of goods, for example, is 80% of your expense. What are you doing today to get it to be 79? Because that's a lot more valuable to you than what was categorized in supply. Your categorization of payroll, okay, yeah, I want to know how much did I spend on pharmacists, technicians, drivers, but if one of these is off for a month, who cares?
And the supplies, are they really going to go back and look at their accounting to see if they can get better supplies? They're going to compare maybe supply companies. They're not going to go back. We should have cut supplies. We should have given those tablets just to somebody with our hands. We should have just let them put a handful in to save that. It's like, they're not going to look at that.
That's how we help with the materiality. It's like, revenue is important. Cost of goods is important. Payroll. That's where most of your money is, right? So let's try to get that as correct as possible, and then we can work through everything else.
Do you ever have people that want to get more than you want to get? They're just like hanging on like this dime where it is. Do you get that ever?
We're usually more exact than they even want.
We get more of what Owen alluded to, is that people are worried about their utility bills when they should be out visiting doctors, driving more scripts into their business, right? They're just focused on the wrong things.
Yeah. And you can tell that they're not focused down to the penny with you guys, but you can tell they're spending more time talking about that.
Yeah, for sure. The things people should be focusing on are the three things Owen alluded to. I mean, you've got to drive more business and get your revenue going, right? More patients. You've got to focus on your purchasing, making sure you've got a good contract, that you're buying from secondaries where you can, and making sure your cost is as good as it can possibly be. And then third is your payroll and your people. And that's pretty much it. Once you get beyond those things, most of it is immaterial. I mean, and not that we want you just to, have your employees crank your air conditioning down to 60 during the summer and make your air conditioning bill, $400 versus $200. But that $200 on extra air conditioning isn't going to make or break the pharmacy. If you get your rebates this month, that just might. So getting focused on the right thing, and particularly around payroll also is a lot of people. That's an area where you've really got to stay focused, and it can get away from you quickly.
And I think that's a hard thing for not just pharmacists, but every small business owner. Where do you focus your time? Because it's easier said than done, right? You're working the bench. You've got to do bills. You've got family. You only have so much time. So, it's hard to even think about what should I be focusing on.
Owen and Rich, your company, Independent RX Consulting, you're both accounting / consulting. If I was focused just on the accounting part of it and Rich, I'll say to you because you're the CPA of the group, if I was just focused on that, and let's say you were just, when I say just an accountant, I mean an accountant versus consulting, would that drive you batty if you were an accountant and you couldn't really touch much on the revenue and the cost of goods and the payroll? Or would you still touch on that as an accountant? It's kind of outside the scope of doing the monthly packaging, right?
Yeah.
It seems like it would drive me batty if I wasn't allowed to say, all right, I'm seeing this, and here's what you should be doing on a bigger scale. But if you're just accounting, they wouldn't really hire you for that.
No, I hear exactly what you're saying. When I went to school, I did not want to be an accountant. I studied accounting because I felt like it gave me a very specific skill set. It helped me understand business. And it's kind of the language of business. And so even now, I've told Owen, and Owen is on, again, the buy start side of our business. And I'm in the accounting in the middle. And then we've got, we help people sell their stores on the other side of our business. But so I tell Owen all the time, man, I never really saw myself coming back to being an accountant. And I don't want to necessarily be an accountant because an accountant in a lot of ways is very reactive, right? You're running the business and we're recording everything that you're doing to run your business. And I want to be a businessman. I want to understand the business. I want to help make decisions. I want to drive the business. I don't want to just respond to what the business is doing and what's happening to the business. So the accounting part is really, really important. We got to get it right. Right. And the tax part is really, really important because there are huge dollars that can be saved or protected there. So so those are really important pieces, but they're only pieces of the big picture of the business. And that's what we want. We want that information and we want to do that so that we have the information to make decisions about the business. It's not for the sake of gathering the data and getting the entries right. It's for the sake of understanding the business and then making decisions about the business based on the data that you have. And if, we have bought and sold stores over, the last 15 years, probably, 30 or 40 stores that we bought and sold, and seeing the disparity in the type of data that we're getting, both off of the pharmacy system, not just the accounting data, but half the time the pharmacy system data is really screwed up, but half the time probably 3/4 of the time the accounting data is really screwed up. All that is data and information that we need to understand the store. Whether you're going to run it for the next 20 years and try to make money running it, we need that information and we need it to be correct. Or whether you're going to sell it in a year from now or in 6 months from now, we need that information to be able to make decisions. So it was all about getting the data and the information so that we could better understand and help make decisions about, or for our own case, just make the decisions about how we're going to run our stores and what we're going to do. It wasn't about wanting to build an accounting practice. It was wanting to get accurate data, which we rarely ever saw in this business.
Does pharmacy carry any certain love, or could you be just as enthused doing this for a bicycle manufacturer or for, roofing supplies or something? Is there something about pharmacy that business, and I understand rising above the accounting, but does pharmacy hold anything, or would this be exciting in a lot of different businesses, just the flow of the business, not just the accounting?
Pharmacy is unique. It's more complex than most. You're dealing with rebates where you buy your inventory and you don't even really know what you're paying for it for another month or two down the road.
I'm not just slow.
No. Well,
come on.
In pharmacy, it's just a unique business. There are, DIR fees. So you don't even know what you got paid for it for 6 months at times. So there's some very unique challenges to understanding pharmacy. And that's the difficulty when you're dealing with pharmacists who are very clinical and patient oriented and such. And you're talking about, a complicated business in and of itself.
Yeah.
There's an appeal to pharmacy in that way. But I never saw myself, I had no clue I would be, spending the latter half of my career in the business of pharmacy. I was in a Fortune 100 company doing mergers and acquisitions. We bought companies over in Europe. I was traveling all over. And now I'm dealing with these small little independent, stores in small rural towns or cities or wherever. But it is exciting. And, So I enjoy it because it's a challenge, and it's also a frustrating business because, what other business can you have no control over what you're getting paid for the product you're dispensing? And, in other medical fields, you're paid for providing, medical service. We've got a reimbursement that's based on the cost of a drug. And so our hands are really, really tied in this business as it sits now. And I hope that within the next few years that really starts to change. I know there's some momentum now in that regard, but my hope would be that these pharmacies have to stay as healthy as possible in order for those changes to come into fruition and come into effect. So understanding your business and not being put in a position where, man, I have to sell today.
Absolutely.
That was a unique question. For me, well, I grew up in pharmacy, right? So it's the only thing I've really ever done. However, I kind of like business in general. Like, I read, I don't know, 10, 20 books a year on business. I study business. It's almost a hobby for me. So, I do hear a lot of people, and Rich is right, pharmacy is unique, but there's also a lot of aspects just to business that apply. I mean, you got to go out and get business.
Yeah.
You've got to do marketing and sales. You've got to control your costs. You've got to find other ways to make more money per patient, right?
Yeah.
So, okay, can I sell them a vitamin? Can I sell them cash DME? Can I sell them who knows what? I mean, clinical stuff now, right? So all that is just basic business. It's, hey, the vitamins, for example, that's just, do you want fries with that? It's the same concept.
Same concept.
So there are a lot of just basic business stuff. It's just, pharmacy's complicated, so it gets a little bit more fun almost. I mean, as Rich was saying, you got to kind of manipulate it and figure the way around it. What other business has all kinds of rules around their marketing, right? We can't pay people we can't even give people coupons in some cases.
Right.
Because they're on a federal plan. So we have to get creative. So that is kind of what, never been asked for that before. It was kind of a unique question.
Let's assume that the average person that goes to pharmacy school is a certain breed, maybe a certain IQ, maybe a certain EQ, maybe a certain way to deal with facts and also with things that are not so factual, not so black and white, and so on. What do you think a negative trait is that person who ends up being a pharmacist brings to the business world?
I think the thing that we occasionally see is we see pharmacists that don't understand and don't necessarily care about the financial aspects of the business. And so where we have great relationships is, and a lot of these pharmacists on our buy start side come in and get into pharmacy from the chain business, and they don't, on the chain side of the business, they don't see the details. They're not exposed to the entire aspect of running the business. And so the most frustrated, instead of the negative side, the positive side are the people that really embrace that, hey, I've got a business now. And so even though I'm patient-centric and I'm clinical and I love what I do and I love serving my patients, the people that also get excited about the business side and want to understand and learn and immerse themselves in the fact that they're now a business owner and they've probably got a lot of debt on their balance sheet or they've got a lot of cash of their own tied up into it. Those people that embrace that side are a lot of fun to work with because, my goal is to also teach them, right? It's not just to hand them a fish. It's to help them understand the business side of what they're doing. And so we spend a lot of time trying to get kind of information to them that they can, if a pharmacist was trying to explain, all the drug interactions and the things that they know to me as an accountant, I would be a little overwhelmed. And likewise, so we try to, give them the information that they need to be able to be the business person without having to do all the minutia and understand everything, at the highest level. So That's the people that we get excited about. The negative side of that would be, a chain pharmacist that comes in and pays no attention whatsoever to the financial side. And we sit there and watch their cash tick down month after month after month without responding to it.
Do you see that where somebody would take on all the debt and all the problems and joys that would go along with an individual pharmacy and not have that thought about, I've got to be a halfway decent business person? It seems way too complicated that somebody would jump in with not having some of that love or those skills already, but I suppose they're out there.
I guess where we see that most is not the people that we work to help buy or start, because we ingrain that from the start, and we make sure that passion is there when they're building their business plan and going through that, getting their financing. That passion has to be there. But we do get stores come to us in crisis mode, right? So they've been operating for the last 10 years. Like I say, for 8 or 7 of those years, it was good. The cash always went up, and they never had to, ever look at a financial statement, and, the accountant did the taxes. Everything was good. But in the last few years, the cash has been slowly draining, and now they're getting to a critical point, and they've got to, they may have refinanced. They've got problems. And so that's where we see it more, is trying to help somebody dig out of a hole that's pretty darn deep. And so we'd much rather get to them before that than when it's pretty late in the game.
They might have come in pretty clinical, but the numbers just worked before, and they've never really been challenged on the positive side, marketing and growth. And maybe they were in a doctor's office or something. On the negative side, they never had to deal with the problem. So they've kind of been not coasting, but they've been able to put more emphasis on their clinical stuff or medical stuff than on the business stuff.
Yeah, Mike. But we also see kind of 2 other scenarios where you're right. There, a pharmacist, as Rich said, is a servant, right? Like, they want to help people. That was why they did it. So there are occasionally situations where they just don't enjoy the financial side of it at all. We also see the flip-flop to that, where they try to do the financial side themselves. So they try to do the bookkeeping, they try to do the
too much,
everything themselves, and because they're trying to understand it and they think they can do it. But, our advice to them is always, okay, you need to understand this. You need to know how to use it. However, put your time where you're good, right? You're really good at building relationships and helping the customer and, being out in the community and serving that community. You just need to understand the financials to, I guess, capitalize off of those relationships and what you are good at.
You guys specializing in pharmacy, that's what I would want. Coming to someone and saying, look, I don't want to teach my accountant, and I don't want my accountant to know a handful of pharmacies. I want my accountant to be leading the charge in teaching me, because I don't know what the hell's going on.
Absolutely.
It's something like they're not going to try to send a human to a certain part of the galaxy because 10 years from now, you could send a person and they would catch that person in like a year.
Yeah.
You can see someone like me who maybe likes some business and maybe likes marketing more, but I might be trying to learn the accrual. I might be trying to learn that for years, thinking I'm going to really gain some knowledge on this. And then it's like, I'm not even up the right tree with that.
That's why we have a business, is because, we've owned pharmacies and we understand that particular business. And there's a segment of people who, like you said, they don't want to spend all the time trying to figure it out. Why don't you go to someone who knows it, so that way you can spend your time doing the things you're really good at?
I was working at the store on Saturday, and a person came in that had heard my show and realized that we didn't live too far from each other. 49 years old, works at a chain pharmacy, and said, I'm thinking of opening up a pharmacy. What would you tell that 49-year-old from Michigan right now?
We're helping people every year open pharmacies. There's still a very valid reason to go into pharmacy. First of all, chain jobs aren't what they were 3 years ago either, right? So those jobs are getting tougher and tougher. There's more demands on pharmacists, and pay is going down. It's not quite the same reimbursement model that it was, 3 or 4 years ago, or the same reimbursement level. So the money and the profitability of the pharmacies aren't what they were, but there's still an avenue there, and there's an avenue to ownership, controlling your own schedule, allowing you to do what you love to do in your environment. You're probably going to take a year to a year and a half to cross over to profitability or to break even. So there you have to have a business plan that has something unique in the business plan that makes it make sense. It can't be, I'm just going to go open a store down the street. There's got to be some real thought into the business plan, and there's got to be some unique, relationships or those types of things that says we're going to be able to drive this business, because it's not much fun watching the cash flow out of the business for a year to a year and a half to 2 years, right? As you try to get to that break even point. But at the same time, you're typically paying off debt. So even though you're not pulling a lot of cash out of the business necessarily, other than a salary, you're still paying off debt. So you're building equity in the business, and that's really important. So you're building an asset, basically. Yeah. So while you're paying yourself a salary, you're not pulling a ton more out. You're building an asset along the way. So there's certainly an avenue that says that, owning and starting an independent pharmacy still makes sense.
Like, I think the big thing that I see from potential owners that they're not prepared for. Okay. I mean, they do need to have a good plan. I think they need to learn business and enjoy it and want to do it, because you are getting into a business. It's not just a pharmacy, it's a business. But the thing that I see that they're surprised about is, when you have a business, whether you're opening or buying, I mean, you become the salesperson. You as the owner are now the salesperson. And a lot of pharmacists, I mean, they that was never something that they wanted to do, right? So you've got to tell your neighbor, the person across the street, the person in the grocery line with you, the doctors, like, they need to be aware that you have a pharmacy and why you're different, why you should be coming there. And it never, at first when you open a store, it's a whole lot. I mean, that's what you need to be doing all the time. But it never really ends. You know this. I mean, you've got to go get new customers, and people need to be aware that, you have a business. And I think that's something people really need to think through and go, am I willing to, just go after getting business? Because if they're willing to, and they have a good plan, I mean, they can be successful. There's ways to be successful in this business, and you can figure it out. You gotta just get a little creative.
It's interesting you use that word salesperson, because I happen to like marketing, and maybe I fell in love with that when times were great at the store and you could just market and say, well, I'm part of this, where in fact, who knows why the business was successful. But think with a new pharmacy, I think you nailed it. You have to be a salesperson, which is supported by marketing. So when someone walks in the door, they've already heard your name before, they've seen your logo, that kind of stuff. But you've got to be a sales team, which is a lot different than marketing. It's one huge step beyond marketing of saying, now you're sales. And if you're not willing to do that, I think that's where the answer is. You've got to be a salesperson.
You're absolutely right, Mike.
One of the big eye openers for me on that side was, we had 180 employees. We had a bunch of stores. We had some great employees, and we would watch our script counts, and a lot of stores were stagnant and some of them were declining. And I would look over at Owen's side of the business where he's helping people start by, and this was before we really got into the accounting. And I was more operating and running our stores, helping run our stores with Owen's dad and Tim. And you just see a vast difference between how an employee in a store runs a store and how an owner who has probably a big loan and their own money investigate, even people that would go from being that employee to being that owner, it was a significant difference. You'd see the uptick because they're getting out. I mean, they're forced to. You have to, as an owner, you have to get out and talk about your store and market it and sell it. And that was always encouraging to me because you'd watch those script counts go up. And even now, when we see a store stagnant and slowing, oftentimes Owen will get on the phone with them and start talking to them. Okay, what are you doing from outreach into your community? What doctors are you visiting? Who are you talking to? And usually, what happens after those conversations is we'll see an uptick in the script counts.
The other thing that they do, Mike, is they just watch every dollar a little bit closer too. As an employee, you did your job and you would manage inventory and so forth. They became an owner. It was like, well, maybe we can put off ordering that bottle one more day, right? I mean, it's just another, and going back to your question, that is, Rich is right, it's not just on the sales side, it's even on the expense side. And, like as an employee, you're like, oh, we're getting really busy. Let's hire another tech. As an owner, you're like, I think we can go another 2 weeks without another tech. We're not going to hire because that's going to come right out of my pocket. And getting into that kind of mentality is the thing that I always try to stress, and we try to stress to these people that are getting into business, is that you're going to have to think about those things and push it just a little bit further and get a little bit more innovative. That some people are ready to do that and some people are not.
The accounting is basically like a non-issue. It's like, all right, let's get it done the easiest way we can do it. Let's move on.
Yeah, absolutely. It's a scorecard to run the business. And if you don't have good accounting and you're using, again, we just talked about script counts or, other metrics that we could get off the pharmacy system. And we do. And we always, collected that data when we ran our stores, is you're only getting half the picture, right? If you're looking just at what's coming off the pharmacy system or you've got to have all the data points, as many data points as you can to make the best decisions you can about your store. So that's why we see the accounting as let's get it done, let's get it timely, and let's use that information along with the pharmacy system data, along with your payroll data, and how many tech hours are you using, how many pharmacist hours are you using, those types of things, to make sure that you're operating efficiently.
Like the debt. For accounting, you don't necessarily have to know that debt, right? That's part of that bigger picture. You want to see what's happening with the pharmacy outside of what the IRS wants.
Right, because at the end of the day, you can look and you can say operationally, hey, I'm making $10,000 a month. I should make $120,000 a year. But when your payment to the SBA or to whatever bank you might be banking with is, 8,000 of that, all of a sudden, your 120 went down to, 48. So that's where, outside, when you look at the operations of the business, it may be profitable operationally, but you've still got to pay back that debt. And, if you've got significant debt, that number can be, $10,000, $15,000, $20,000 a month of cash flow that needs to be covered by the operations of the business. So,
and Mike, there might also be decisions like, hey, I did well this year. Should I pay down debt? Should I reinvest in something? Should I, so you got to have that full picture to be able to go, well, actually paying the debt for you is probably the best thing to do because of X, X, and X. So we still need we need all those numbers. Again, you need the scorecard, and the scorecard doesn't just include financials. I need timely financials, and then you also need these surrounding things like script count and debt and so forth.
Well, and you look at from the debt side again, we'll also see people that have very short-term notes. Their notes might be 5 or 7 years. And so when you extend those out to 10 years, or if you've got real estate and you can extend them out even further to 15 or 20 as a result of having real estate financed in the deal, there's a huge difference in cash flow if you're on a 15-year amortization versus a 10-year or a 7-year or a 5-year. So, and you look at that was the value of all these EIDL loans, right? Because they were 30-year amortizations at 3.75%. So a 30-year AM is a huge difference from even your typical 10-year SBA note. So making sure that you're properly financed. I mean, you don't want to just push it out for the sake of pushing it out. It's good to get that debt paid off because at that point you get to keep the cash, right? But at the same time, if you're properly financed and you have, that can save you cash flow in the short term, which may be necessary to keep going.
It's like a cancer diagnosis, basically. It's like the goal is try to get 6 months, try to get another 6 months out of something because something's going to happen maybe in those 6 months where they're going to find a cure and extend it another 6 months, Same with the pharmacy business now. It's like, try to hang on. I mean, if it's bad and you want to get out, go. But if you've got some love for it still, try to hang on because every 6 months there's some things that are happening, whether it's legally or, I never thought I would say this, but government relief or business climate changes. And it's like, hang on. You don't know what's going to happen.
I was at a large technology company for a lot of years, and it was always, there's intense competition and lots of challenges. And, so no matter where you are, it's a battle. I mean, Apple seems to print money, but the rest of us seem to have to really earn it, right? And it's a challenge, but
with Apple, I mean, wouldn't they have loved to keep their iPod brick, from the early 2000s? Here's our iPod. It holds 1,000 songs and it weighs this, and don't anybody look. We're just going to make money at it. I mean, everybody's got to keep improving.
Go even further back. I love that. I use that analogy all the time. Wouldn't they have loved to just keep selling computers?
Exactly.
I mean, now they make all their money off phones and music.
Yeah.
They don't even have the same business model as they did. Netflix, when they first started, they were shipping you DVDs.
Who wouldn't love to keep things the same?
Yep.
That's not life, though.
But you got to have good financials to, figure out where you can change.
Exactly. You got to know what's going on. All right, Rich and Owen, thank you. What a pleasure.
Yeah, thanks, Mike.
Yeah, thanks, Mike.
It was fun.
Always fun.
All right, thanks, you guys. Keep up the good work.
All right.
Bye.
Bye.